This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, July 6, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin is sitting at $64,181, holding a modest green candle in a market defined by extreme distress. The Fear and Greed Index has crashed to 14, screaming extreme fear, yet Bitcoin's spot price has refused to crack, climbing 0.71% while altcoins bleed. What is happening when the crowd wants to sell, but the price refuses to go down? Turning to our calendar for Monday, July 6, 2026. We have no major centralized bank decisions or high-profile crypto-specific earnings drops scheduled for the next 24 hours. The market is running on raw data and headline velocity. The only scheduled event is the ongoing processing of the PayPay Nasdaq IPO filing, which continues to drive flow analysis for XRP and BNB. Apex. With no macro events to anchor us, what is the dominant structural theme right now?
The dominant theme is bifurcation. We are seeing a complete split between spot resilience and derivative abandonment. Bitcoin is holding $64,181 on spot volume alone, while futures demand has evaporated to 2024 lows. Simultaneously, we have isolated pockets of hyperactive speculation in XRP driven by the PayPay IPO narrative, while everything else, especially high-beta alts like Cardano, is being crushed. It's a market where capital is not fleeing, but it is rotating violently away from general risk into very specific, catalyst-driven buckets.
Let's start with the broad sentiment landscape. Pulse, you're tracking the Fear and Greed Index. We're at 14 out of 100. That is deep into extreme fear territory. Is this a buying opportunity, or is the market still falling?
It's neither. It's a psychological baseline. The 7-day trend average is sitting at a stubborn 12. This isn't a flash crash. It's an entrenched state of mind. Retail sentiment is so compressed that traditional dip buying logic breaks down because the crowd doesn't believe anything is cheap. They just want out. However, there is a massive disconnect here. Bitcoin is up 0.71% despite this 14/100 reading. That tells me that whoever is buying is not reacting to sentiment. They are reacting to necessity. Meanwhile, the 700% spike in Iranian crypto outflows following those US-Israeli airstrikes is creating a parallel universe of capital flight that Western retail isn't even aware of. They're scared of Fed policy. Offshore capital is scared of sanctions.
That necessity Pulse mentions is technically fragile. Bitcoin is holding $64,181, but look at the volume structure. We have $88.69 billion in total daily volume across 17,345 active cryptos, yet Bitcoin's dominance is compressed at 55.95%. This means liquidity is churning through the altcoin graveyard, not building a floor under Bitcoin. Technically, Bitcoin is forming a base, but it's a base supported by thin order books. When Cardano drops 3% and Dogecoin drags down 1.6%, it's not just sentiment, it's a technical breakdown of support zones. If Bitcoin fails to hold $64,000 on the Asia Open, that thin spot bid will slip instantly because there are no leveraged longs left to defend it.
And that's the danger, Grid. You're calling it a base. I'm calling it a liquidity trap. Bitcoin's 0.71% gain is artificial. It's being propped up by passive holders who aren't selling, not by active buyers stepping in. With futures demand at 2024 lows, there is no cushion. If a large block of spot inventory decides to offload, the lack of derivative support means we see freefall, not a bounce. And don't forget Core Scientific turning lower after disappointing Q4 results. That's the mining sector flashing red. Infrastructure stress usually precedes broader network anxiety. The stability we're seeing is the calm before a potential structural unwind.
So we have Bitcoin stabilizing on thin air while the broader market bleeds. Let's zoom in on the asset trying to buck that trend, Solana. Solana is up 0.75% to $82.26. CIPHER, walk us through the flow dynamics here. Why is Solana holding while Cardano collapses?
Solana is acting as the primary beta indicator for network health, and the flow data is interesting. While Bitcoin is stagnant, Solana's plus 0.75% gain coincides with a subtle shift in decentralized finance TVL allocation. Capital is rotating out of legacy L1s like Cardano and XLM, which are shedding nearly 3% each, and moving toward chains with higher throughput utilization. But here's the catch. This isn't organic growth, it's a flight to speed. In an environment where institutional futures demand is zero, high beta chains like Solana become the playground for residual liquidity. However, the volume profile on Solana is concerning. The 24-hour high is $82.98, and it closed near the top of that range. That suggests short covering rather than new money entering. It's a relief rally, not a trend change.
Greed CIPHER. Visually, Solana is testing the upper boundary of its recent consolidation box at $82.98. If it rejects here, we look at double top formation on the 4-hour chart. But more importantly, look at the correlation decay. Usually when Bitcoin is green, Solana leads. Here, Bitcoin is barely moving, yet Solana is pushing. That divergence often ends poorly for the beta asset once Bitcoin resumes its directional decision. Until Bitcoin confirms strength, Solana's move is just noise in a bearish channel.
And let's not ignore the psychological component on Solana. With the fear and greed index at 14, any green candle feels like a miracle. Traders are fear of missing outing into Solana because it's one of the few assets not crashing, but that sentiment is incredibly brittle. One bad headline, say, a network outage or a regulatory comment, and that 0.75% gain flips to negative instantly. The sentiment isn't supportive, it's desperate.
Let's talk about the biggest outlier in terms of narrative power, XRP. It's down 0.71% to $1.15, but the headline flow is intense. PayPay, the 40% owner of Binance Japan, is seeking a $1.10 billion Nasdaq IPO. CIPHER, how is the money actually moving on XRP given this news?
The volume spike on XRP is entirely correlated to the PayPay filing date. We are seeing elevated order sizes in the USDT pairs, but the on-chain flow is quiet. There is no mass transfer from exchange wallets to cold storage, which would indicate long-term accumulation. Instead, we see high-frequency trading bots executing around the IPO news cycle. This is speculative churn, not strategic investment. The $1.10 billion IPO size is significant, but it's focused on the Japanese market entity. The flow data shows that retail is piling in, expecting a listing benefit, but institutional desks are staying on the sidelines, waiting for clarity on cross-border settlement integration. Until we see actual TVL increases in XRP-led bridges, this is just noise trading.
Which brings us to the risk. SPECTER alert. This XRP pump is a classic bubble structure in a risk-off environment. You have a static price, minus 0.71%, but high volume driven by a single event. When the news fades, which it will quickly, the speculative profit-taking will be violent. Compare this to Bitcoin Cash, BCH, which is up 1.24% to $245.53. BCH is rising on its own merit as a legacy store of value play, whereas XRP is rising on external hype. Hype dies faster than utility. If the broader market turns south, XRP's correlation to the pay-play narrative will turn from a tailwind to a lead weight.
We've covered the leaders and the hype. Now, let's look at the casualties. Cardano is down 3% to $0.18. Dogecoin is down 1.6% to $0.07. These are high beta, legacy names. Grid, what does the chart say about Cardano's breakdown?
It's a clean break. Cardano dropped below the $0.19 psychological threshold and found no support until $0.17, which is its 24-hour low. The candle structure shows a series of lower highs, indicating that every attempt to rally is met with immediate sell pressure. The 3% decline isn't just a blip. It's a rejection of the entire $0.18, $0.19 zone. Technically, this looks like a continuation pattern. Unless Cardano can reclaim $0.19 with volume, the path of least resistance is lower. It's behaving exactly like the wider market sentiment dictates. If there's no bid for Bitcoin, there's certainly no bid for speculative L1s.
And look at the broader implication. Cardano is down 3%, XLM is down 1.62%, and Dogecoin is down 1.6%. This isn't random. It's a systematic derating of non-Bitcoin assets. The market is telling us that crypto is too broad a category. Investors are stripping away everything except Bitcoin and maybe a couple of high-speed chains. Cardano's decline signals that the narrative around smart contract platforms has lost momentum. It's not just technical, it's ideological. The market is voting with its wallet against the legacy smart contract era.
I'd add that the sentiment data confirms this abandonment. Social volume for Cardano has plummeted alongside the price. When price drops and attention vanishes simultaneously, it's not a buy the dip scenario. It's a get out before it goes nowhere scenario. The retail community is tired of holding bags that don't move. The fear isn't just about losing money. It's about missing out on the few assets that are moving, like BCH or NEAR. That frustration accelerates the sell-off.
NEAR protocol, NEAR, is actually up 2.44% to $2.07, standing out against the Cardano bleed. CIPHER, is there a flow reason for NER's strength, or is it just relative safety?
It's relative safety mixed with specific protocol developments. NEAR is benefiting from the AI x crypto narrative residue, but more importantly, the flow data shows a steady accumulation of NEAR tokens in self-custody wallets over the last 7 days. Unlike XRP, this isn't one-day churn, it's gradual buildup. The 2.44% gain reflects that underlying demand meeting a low supply float. However, check the correlation with Ethereum. NEAR often tracks Ethereum's momentum. Since Ethereum is lagging at $1,804.46, plus 0.83%, NEAR outperformance might be unsustainable if Ethereum breaks below $1,800. Keep an eye on Ethereum as the ceiling for NEAR upside.
Let's talk about that ceiling. Ethereum is at $1,804.46, up 0.83%. It's positive, but it's lagging behind Bitcoin's percentage gain. Grid, is Ethereum showing any signs of weakness compared to Bitcoin?
Yes, look at the Ethereum/Bitcoin pair. It's grinding lower. Bitcoin's 0.71% gain against Ethereum's 0.83% sounds close, but the dominance chart shows Bitcoin strengthening its grip. Ethereum is failing to break above its local resistance near $1,819.88. The 24-hour high was $1,819.88, and it rejected hard. That rejection is a bearish signal for Ethereum. It means sellers are active at $1,820. In contrast, Bitcoin is holding $64,181 comfortably. The divergence is widening. Ethereum needs to reclaim $1,820 with volume to prove it's not just following Bitcoin's wake. Right now, it looks like Ethereum is exhausted.
Exhaustion is putting it mildly. Ethereum is facing a dual threat. First, the technical rejection at $1,820. Second, the regulatory shadow. The Senate housing bill, including a CBDC ban, is positive for decentralization, but it also creates uncertainty around stablecoin integration on Ethereum. If institutions are hesitant to touch Ethereum due to regulatory ambiguity, the spot price will remain suppressed regardless of tech upgrades. The 0.83% gain is deceptive. It's likely short covering, not new demand.
We have one more critical piece of data, the VIX. The SIBO volatility index is at 15.81, down 0.34 points. This indicates relatively low volatility in traditional markets. SPECTER, does this low VIX contradict the crypto fear and greed score?
It absolutely contradicts it, and that's the anomaly. Traditional finance is calm, VIX tilde 15.81, but crypto is in panic mode F and G14. This decoupling suggests that the crypto fear is idiosyncratic. It's not spilling over from stocks. It's coming from inside the house. The 700% spike in Iranian outflows and the core scientific earnings miss are internal shocks. Because VIX is low, equities aren't helping hedge or offset these crypto-specific risks. We are in a siloed crisis. That makes the support levels we're discussing even more critical because there's no external buyer of last resort from the equity markets to step in. Crypto is alone.
Let's summarize the key themes emerging from this analysis. First, Bitcoin's stability at $64,181 is technically valid, but fundamentally weak due to 2024 low futures demand. Second, the pay IPO is creating a speculative bubble in XRP that may not hold without broader market approval. Third, legacy alts like Cardano and Dogecoin are suffering a structural derating. Apex. Tie this together for the Asia session.
Here is the synthesis. Grid flagged the fragility of Bitcoin's $64,000 support, and CIPHER confirmed that XRP's movement is speculative churn, not structural accumulation. Together, they tell us that the safe trade is Bitcoin, but it's a risky one due to the futures void. Meanwhile, Pulse highlighted that sentiment is at 12, meaning any sudden volatility will be amplified by retail panic. SPECTER warned about the core scientific stress, which suggests the mining sector hasn't bottomed. So the strategy is clear. Avoid high-beta alts like Cardano and Dogecoin that are breaking technical support. Respect the XRP noise. It's a trap, not a trend. Hold Bitcoin only if you can withstand a liquidity gap test. The market is bifurcated, and playing both sides equally is a recipe for drawdown.
Final takeaway, the market is in extreme fear, but the price action is telling a story of fragmentation, not uniform collapse. Bitcoin is holding, but barely. Alts are bleeding, but selectively. Trade the splits, not the sweep. Thank you for listening to ShadowQuant Crypto Edition. Tomorrow, watch for any follow-up on the pay IPO filing and monitor whether Bitcoin can maintain the $64,000 level against the backdrop of low futures demand. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session where we will see how these calls play out. Until then, trade safe.